Good evening, all. Ira Epstein, and I'm very late. This is the latest I've been in about a year, and what a way to start off the new year. I ran into a computer glitch. I apologize for it, but I'd rather put this out than just say, hey, you're not going to get one of these tonight. They are free. They're not part of my paid subscriber videos, but I like to be there for you. So we are now in the financial market update for the futures. It is January 2nd, 2024. The time is 7:40 p.m. Central Time, and you have a losing day today in the stock market. Uh-oh. I guess that's the January effect. Let me tell you about the word, the January effect. Let me see if I can bring this up for you, in fact, right now. Here we go. Since 1993, there have been 17 winning January months, half of them roughly, 57%, and 13 losing months, 43%, making the odds of a gain only slightly higher than the flip of a coin, basically. Since the start of 2009 market rally, because that's when, remember the big break, the monster we were in, the depression we were all fearful of, and through January 2023. I don't know how 2024 is going to go, but I know that. You have, in months, showed 7 winners versus 7 losers, about a 50-50 split. So let me tell you about the January effect, because you'll hear people talk about it. There is none. There's a January-February effect, but that's for my readers in my full research report, and I'm not going to share that with you right here. Now, something I do want to share with you is pretty simple here. I know many of you like and look for me when I come out with my specials so you can subscribe. Through January 5th, which is this coming Friday, you can take advantage of my New Year's sale. Any yearly subscription purchase for new subscribers, or if you're an existing subscriber only with a monthly subscription, you can upgrade to a 1-year subscription for 40% off my retail price. You need not do anything. The website will handle the whole thing. You don't need a code in there. These are my full research if you want it. This is my morning subscriber videos for spiders, ETFs, and the futures markets. It's a great discount. 1 year. Got to do that. It is not available if you have a 1-year subscription right now and you want to flip to a different 1 year. I won't honor that. So that's the caveat. How do you get there? Move your cursor to the top up here or go to iraepstein.com under the word research. Take advantage. It's going to disappear on you, and then that's it. I don't have another holiday to celebrate, so you're not going to get this type of deal. So let's go to the marketplace and see what we've got. You're down 0.71%. The world is ending. You're down 34 points so far for the week. Okay. We have a market here that you can see peaked out. I'm sorry about that arrow there. It wasn't there before, but my cat is over here, and she walked, and she put that there. And you can see how the market is slipping back a little bit here. The pattern is one of a higher high and a lower low. That is not a trend pattern per se. When we step over here, where should be the supports? You see the red line, the 18-day average. That's the 18-day average of closes. If you've understood and taken anything with my Bollinger Band course, my enhanced course, you understand that when you have an embedded reading and it gets lost, with the red line closing back under 79, the odds are super strong. They are not always guaranteed, but super, 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 super strong that the market's going to make a run at the lowest main moving average under it, which in this case is the 18-day average of closes. The 100 and the 200 are way down here. So that's what the market's in the process of. The identical thing happened in the NASDAQ. Market lost its embedded reading just now, goes right to the 18-day average. You're back to neutral territory. You haven't turned bearish. You've given up that excessive bullishness. You're probably going to go to a consolidation phase in these markets. The strongest of the markets and the strength on a seasonal basis ends in 2 ways. Number 1, January 3rd. That is Yale Hirsch's, the Stock Traders Almanac, Santa Claus Rally. That ends tomorrow, officially. On a seasonal basis, out of the past 15 years, 14 years, the market ends this rally on January 8th. So you're in that time frame where the market can slip back right here and go back for a consolidation. No surprise. In the Russell, the market is slipping back. It lost its bullish embedded reading. You're in a correction phase. Accept it, live with it. You're going to get days up, days down. People will say, this is my bargain to come in. The others will say, I want a window dress. It goes back and forth. And that's normal in the month of January. I just showed you the facts. Half the time up, half the time down. It's not a strong month one way or the other. Higher high, lower low. By the way, I grew up hearing and people were telling me, the January effect. People have all this money. They got it from their pension plans, their IRAs, whatever they're going to invest it. That's nonsense. I don't know where it comes from. The statistics prove it isn't real. Very important to understand. In the 5-year note, okay, you went through this low, you lost the bullish embedded reading, you're probably going to the 18-day average to regroup and see what's next. And in the dollar, you were bearish, you had the embedded reading, where both the blue and the red were underneath the 20 level, you lost the momentum, bingo, away you go. You had touched the Bollinger Band areas here, and you came back up. You're back to neutral and market upon market upon market. This is exciting, because you're going to be able to come into fresh trends as they now start developing, not worried, gee, when is that going to happen? And that, to me, this is very good. Look where you went down to in the euro, right back to the 18-day average of closes. The market had tried the embedded reading, lost it. It's made its goal back to the downside. In the pound, identical. You went to the Bollinger Band. What are the odds of staying over that black band? 5% of the time. You weren't embedded. So I think the pros were coming out of the market. It had gone back to the 18-day average. It had an uptrend. 3 days ago, it got up there. Boom, I think the pros came out. And I know the Johnny-come-latelys are always saying, Ira, you're wrong. This is the time it's just going to keep going. Sure it is. That's how they build those hotels in Vegas. They're playing that you are going to be right and break the bank. Huh? Bitcoin. Now, Bitcoin, same thing. I am the bull here that's telling you I thought the market and still think the market will pop because I think the SEC has no choice but to release the ETFs based on spot. And when they do, there'll be a certain amount of money that banks and money investors are going to say, we should have exposure to this. Now, here's how we can do it. This is the tool you do it with, blah, 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 blah. I saw today the head of the CBOE exchange, the digital division, out on, I think it was CNBC today. It was CNBC or Bloomberg. I flip around so much. And he was explaining the rush of money they're seeing. I get it. But that's why the market went to the Bollinger Band and it's got its resistance. Now, eventually, markets break out of sideways action. Will this be the event? I'm certainly not bearish. The question is, how much of it can keep going? WTI crude, up here, you didn't run. I would have thought an Iranian warship could send oil prices scooting higher. It had zero impact at the end of the day. Nothing really happened. Look it, market gave it all up. This is your first challenge of a 200-day moving average in gray. A 200-day moving average is almost a 1-year average. That's a lot of resistance. So if the market's going to run into anything and not be embedded, just overbought, that's a logical spot for the resistance. If you go to the Bollinger Band, even better. But I think the pros have been coming out for days on end. And today the market took out an outside day higher. Do you see right where I'm pointing? If you've taken my outside day course, you understand the importance of that. The odds strongly favor a move back to the 18-day average of closes. You're already in the Fed crude coming down, and be careful here. This market can surprise you on the downside. 68.44 is a possibility. You had a big outside day down. So today's high to me is going to be an important number that I don't want to see taken out in the next 2 trading sessions. You're doing the same in the heating oil. You could come back down to these lower lows. You are getting oversold, but the trends are down, not up in the energy. And the U.S. is now the largest LNG exporter in the world, bigger than Qatar, bigger than Australia. We took the title. I write about this in my full research report as well. So if you want to keep up with the different things that I do, New Year's sale is the way to do it. 40% off. You heard me, 40% off. Goes through Friday, January 5th. Take advantage by going to iraepstein.com or moving your cursor to the top right here. I'm Ira. You have a good day, and I will see you tomorrow morning. Take care.